common question I get asked is, when should I move from sole trader to Pty Ltd Company? What are the reasons why I should move, and how could it benefit me? So first things first is a sole trader business is actually quite simple and quite cheap to run and do the reporting and accounting and tax work for. Normally it could cost you anywhere between $200 to $500 a year, maybe a bit more if you want to outsource all the accounting work and tax work. When you set up a Pty Ltd company, it gets quite expensive. You have to prepare a tax return in the company, you have to prepare business activity statements in the company, as well as you got to pay yourself, do payroll, as well as do wages and pay your own superannuation, as well as do your own personal tax return. And don't forget, you also have to pay a registration fee and setup fee for the Pty Ltd company. So the cost can go from $300 to $500 for a sole trader, all the way to $3,000 to $4,000 for Pty Ltd company. You gotta outweigh the cost and outweigh the benefits. So a sole trader gets taxed at anywhere between 0% all the way to 45%. And normally when you start making around 100 to 120K in profits a year in your sole trader business or in taxable income, you're generally taxed at 37% tax bracket. So you'll be paying 37 cents in the dollar of the income that you make over 90K. For a Pty Ltd company, it's only at 27.5%. So there's a big difference. So a company is at 27.5, whereas your personal name is at 37 if you're earning over 100K a year. It's quite beneficial, right? Because you're actually saving 10%. But the thing is, it does cost quite a fair bit. Generally, rule of thumb when I tell my clients is that if you don't make over $120,000 in your business, don't bother looking at it, because the benefit in tax purposes and cost savings, it's not that much at all. But you shouldn't just be looking at the cost savings and tax savings when moving to a Pty Ltd company. There are a lot of factors that you should be looking at. So one thing that you should be looking at is asset protection. So moving to a Pty Ltd company, it's a separate legal entity. Your assets are separated from your business. It's not your personal name that's on the business. It's the company name separately. So that's a good thing, because then if something were to go wrong in your business, it doesn't affect your personal assets and liabilities, or less likely affect your personal assets and liabilities. And then you got to look at your personal situation, and are you risk averse? Because if you are, then possibly it will be a good idea to set up a Pty Ltd company, because you don't want that to affect your personal assets and liabilities and personal situation. The last thing you need to look at as well is some customers and some major companies will prefer to deal with only a Pty Ltd company. There is no employee issues, there's no minimum wages, there's no tax issues when it comes to that stuff. So that's why they prefer to deal with a company to company. And obviously, company to company, there's a brand, there's an agreement in place, it's more professional. So that's another reason why you need to move to a Pty Ltd company. So you got to ask yourself, do your customers actually mind if you are not a Pty Ltd company? So if you're thinking of moving to a Pty Ltd company, it's best to speak to your accountant, but definitely look at asset protection purposes, definitely look at your tax savings and cost benefit and cost involved in setting up a company and running a company. And also look at the business risks and how risk averse are you in your business.